Here are 4 pieces of news from the crypto industry. A crypto whale acquired a significant amount of Pepe and ETH during the dip. The U.S. Federal Reserve accused Customers Bank of inadequate control over crypto investors. The SEC charges Novatech promoters with fraud. Lucan Chain analysts found the reason for Bitcoin's price drop. First news. A crypto whale acquired a significant amount of Pepe and ETH during the dip. During market downturns, the crypto whale ETH accumulated Pepe tokens, spending a total of $3.13 million USDT over the past 7 days to purchase 420 billion Pepe. The first major purchase was made during the market crash on August 5, with another purchase occurring just a few hours ago. These strategic buys earned the user a profit of $170,000, with a growth of 5.4%. In addition to Pepe, the wealthy trader also acquired 2,978 ETH, spending $7.05 million USDT. This move brought him an unrealized profit of $534,000, a 7.58% increase. Crypto market participants are closely watching ETH, as his actions are interpreted as bullish or bearish signals. Despite losing its former popularity, Pepe continues to attract the attention of major investors, which may indicate confidence in the long-term price prospects of the meme coin. Additionally, the whale's decision to invest in Ethereum reinforces the altcoin's status as a safe asset, solidifying Ethereum's position as the dominant altcoin in the cryptocurrency market. The significant profits from the whale's investments in Pepe and ETH demonstrate the potential benefits of market timing. However, it is important to note that profits are not guaranteed and come with substantial risks. Second news. The U.S. Federal Reserve accused Customers Bank of inadequate control over crypto investors. Customers Bank, which serves American crypto companies, has been ordered by the U.S. Federal Reserve to limit the risks associated with servicing clients investing in digital assets. The Fed requires the bank to notify the regulator of any new service agreements with crypto market participants. The Federal Reserve accused Customers Bank of inadequate control over activities related to investments in virtual digital assets. The Fed's notice highlights significant deficiencies in Customers Bank's risk management practices and compliance with applicable laws, rules, and regulations related to anti-money laundering. Customers Bank must promptly provide the Fed with a plan and a new approach to compliance, including an agreement to be prepared to collect, analyze, and store complete and accurate information on all clients. Additionally, the bank must notify the Fed 30 days in advance of adopting any new strategic initiative, product, or service related to digital assets. Earlier, experts from the American investment bank Jefferies reported that the fate of the U.S. crypto industry and the price of Bitcoin are directly correlated with the outcome of the U.S. presidential election, scheduled for November 2024. Third news. The SEC charges Novatech promoters with fraud. The U.S. Securities and Exchange Commission has filed a lawsuit against the crypto pyramid and its operators, accusing them of stealing $650 million from 200,000 investors worldwide. Novatech primarily targeted interest groups, including Haitian American church congregants, through WhatsApp groups and promotional events. On Monday, the SEC filed a lawsuit against the alleged crypto pyramid Novatech and its 8 founders, accusing them of fraud and multiple violations of federal securities laws. Novatech allegedly defrauded investors of $650 million over a 4-year period, according to the SEC statement. The lawsuit was filed 2 months after New York Attorney General Letitia James filed a lawsuit against Novatech, its founders, and another alleged financial pyramid linked to Novatech. According to the SEC complaint, Novatech and its promoters profited from specific interest groups, primarily Haitian Creole church congregants in the U.S. and abroad, using WhatsApp groups and promotional events, convincing more than 200,000 investors worldwide to shell out a total of $650 million between June 2019 and May 2023 when the scheme collapsed. The company's founders, American couple Cynthia and Eddie Petian, who are believed to currently reside in Panama, and promoters including Martin Zizi, James Corbett, Corey Sampson, Dapolina Dunbar, John Garofano, and Marcia Headley, all named as defendants in the SEC lawsuit, used religious overtones to attract investors. Cynthia Petion referred to herself as the Reverend CEO in Novatech's promotional materials and in her social media profiles, claiming that God sent her a vision to create the company while she was brushing her teeth. Potential Novatech investors believed their investments would be pooled and then traded on the crypto and currency markets. Novatech's marketing materials promised investors 2 to 3% weekly returns, according to the SEC, and allegedly never published weekly trading losses. However, according to the SEC, only a small portion of investor funds was actually invested, and the funds that were invested suffered significant trading losses. From 200,000 the Petions and their associates allegedly operated a Ponzi scheme, using new investors' money to pay previous investors. They also allegedly transferred millions of dollars of investor funds to themselves. The scheme began to unravel in October 2022 when investors started experiencing significant delays in withdrawing their funds from the site. Shortly after the withdrawal issues began, several state securities regulators in the US and Canada issued cease and desist orders against Novatech. In Novatech's E3, the Petions shut down Novatech and took its website offline, leaving remaining investors unable to withdraw their funds. The SEC complaint alleges that Novatech and the Petions violated federal securities laws' anti-fraud and registration provisions. Various defendant promoters are accused of violating anti-fraud provisions, securities registration provisions, and broker-dealer registration provisions of federal securities laws. The SEC is seeking a permanent injunction, the return of ill-gotten gains, as well as prejudgment interest and civil penalties. One of the defendants, Martin Zizi, has already agreed to a partial settlement. Without admitting or denying the charges against him, Zizi agreed to pay a $100,000 civil penalty and be permanently barred from future securities violations. The partial settlement is still subject to approval by a judge. Fourth news. Chain analysts found the reason for Bitcoin's price drop. Recently, Bitcoin has been trying to rise and consolidate above the $60,000 level, and crypto analyst The Moon Carl believes that breaking this key resistance could lead to a move towards $125,000. His more than bold forecast is based on the formation of the cup and handle pattern. The Moon Carl cited the price movement of Bitcoin from 2021 to the present, highlighting the formation of the cup portion after BTC's decline in late 2021. The cup portion represents a period of consolidation and recovery, where Bitcoin's price gradually formed a rounded bottom or strong support level. After the cup, the handle forms a brief period of consolidation or a small correction, which Bitcoin appears to be experiencing now. The analyst noted that if Bitcoin successfully breaks out of this handle formation, and then the $70,000 level, the next price target could be $125,000. This figure is derived by adding the height of the cup to the breakout point. Another analyst, the Scalping Pro, expressed the opinion that despite recent volatility, Bitcoin is capable of a long-term bull rally. In his view, Bitcoin is forming a classic parabolic curve, often associated with strong bullish momentum. The curve suggests that Bitcoin could experience rapid growth through each base, with a potential peak target of around $180,000. This parabolic growth could be followed by a sharp correction. The current decline in Bitcoin is partly explained by the lack of institutional interest in purchasing stablecoins. Analysts at Chain wrote on August 12 that institutions stopped buying USDT 2 days ago. This indicates a lack of buying pressure and declining investor interest in stablecoins, which are usually used as the main means of transitioning from fiat currency to cryptocurrencies.